Have you seen the price of gold lately? It's hitting numbers that just a few years ago sounded pretty much impossible. And if you own any gold at all, this brings up a huge question. What do you do now? I mean, is this the top? Or is this just getting started? Okay, let's get into it because your old game plan might be completely out of date. This is the number that's on everyone's mind. $5,000. You know, this used to be a prediction you'd hear from the, let's say, fringes of the financial world. Now, it's being talked about seriously by giants like Goldman Sachs. It's not some wild guess anymore. It's a real target that analysts are trying to wrap their heads around. And really, that's the big question we're tackling in this explainer. Are these crazy high prices just a temporary spike, a bubble, or are we seeing a fundamental reset in how the world values gold? More importantly, what in the world does that mean for the economy and for you? So here's how we're going to break it all down. First, we'll look at why this is all happening right now. Then we'll dive into that huge debate. Is this a rally or a bubble? After that, we'll explore how gold's whole identity might be changing. And then we get to the practical stuff, smarter ways to think about selling, and even a wild idea where you might not have to sell at all. All right, first things first. Why are we even talking about this? Well, the answer goes way deeper than just supply and demand. What we're seeing is a massive shift in how people and even countries think about value itself. This quote from a TradingView analysis really just hits the nail on the head. The argument here is that maybe we're looking at this all wrong. It's not that gold is suddenly worth so much more. It's that the dollars, yen, and euros we use to measure it are worth less. Gold's price is just the symptom, not the cause. And the value of that paper money is getting squeezed by a perfect storm of uncertainty. You've got governments drowning in debt. Inflation is sticking around like a bad house guest, eating away at your savings every single day. The world stage is getting tense, alliances are shifting, and then you throw in wild cards like AI that are changing everything. In a world like that, it's no wonder people are looking for something solid, something outside the system. Which brings us right to the heart of the debate raging in the market. Is this a healthy, sustainable rally built on all those fundamentals we just talked about, or is it a classic speculative bubble that's just waiting for a pin? Believe me, there are very, very smart people on both sides of this. Okay, let's start with the bull case. The argument here is pretty straightforward. The things pushing gold higher aren't going away anytime soon. They're structural, they're long-term, and that means this rally could have a long way to run. The absolute cornerstone for the bulls is the slow-motion decline in trust for the US dollar. Just think back to 2022, when Russia's currency reserves were frozen. I mean, that sent a shockwave through every central bank on the planet. They all realized, wait a minute, our dollar holdings could just disappear? The result? They started buying physical gold like there was no tomorrow. In fact, Goldman Sachs ran the numbers and found that if just 1% of private money moves out of US bonds and into gold, the price could hit that $5,000 mark. And this chart right here shows you exactly who the big players are. Yeah, the US is still number one, but look at who's been buying. Countries like China have been on an absolute shopping spree, stacking up their reserves and moving away from the dollar. This isn't just a handful of investors speculating. This is a calculated geopolitical strategy being played out by entire nations. But just when you think that case is rock solid, in comes a huge counter-argument from one of the biggest names in investing, Cathie Wood of ARK Invest. She's looking at the same picture and saying, nope, this party is about to end, and it's not going to be pretty. So the bear case basically argues that whatever the fundamentals might be, the price has just gotten way ahead of itself. It's gone too far, too fast. From this viewpoint, gold isn't a safe haven right now. It's one of the most dangerous bubbles in the market. Cathie Wood's argument is all about historical data. She looks at a specific ratio, the total value of all the gold in the world compared to the US money supply. And right now, that ratio has hit an all-time high. It's even higher than the infamous peak in 1980, right before gold completely crashed. It's even hitting levels from the Great Depression. Her warning is crystal clear. Moves this extreme almost always end badly. And if the dollar starts to strengthen, it could be the pin that pops this whole thing. So we have two totally convincing and yet completely opposite arguments. It's kind of crazy. Which leads to another, more interesting idea. What if this isn't just about price? What if gold's actual identity, its whole reason for being in a portfolio, is changing right before our eyes? Okay, let's break this down. For decades, gold's job was simple. It was the ultimate safe haven. You bought it when you were scared, stocks went down, gold went up. Easy. But lately, it's been acting weird.
It's behaving more like a speculative, momentum-chasing asset. It's been going up at the same time as risky things like stocks, which completely breaks all the old rules.
And hey, don't just take my word for it. This quote comes from the Bank for International Settlements. That's basically the central bank for all the other central banks. And they're saying this is the only time in the last half century that stocks and gold have both exploded upwards together. This isn't just a little market quirk, folks. This is a totally unprecedented event that's making people question decades of investment strategy. So with all that confusion and complexity, what are you supposed to do? Let's get practical. How do you even begin to think about an exit plan? Well, the key is to stop thinking about the price in dollars. Seriously, the first step is to get this question out of your head. Why? Because you're measuring a real, tangible asset, your gold, against a paper asset, the dollar, that is constantly losing value. It's like trying to measure how tall you are with a ruler that keeps shrinking. Sure, the number gets bigger, but it doesn't really tell you what's happening. This is the much more powerful question. What can my ounces of gold actually buy me in the real world? Because let's be honest, the end goal isn't just to stack up more paper dollars. The real goal is to use the wealth you've preserved in gold to buy other valuable things, maybe things that are currently undervalued when the time is right. And this is how you do it. Instead of obsessing over the dollar price, you watch ratios. Take the Dow/gold ratio. It's a simple question. How many ounces of gold does it take to buy the entire Dow Jones Industrial Average? That ratio swings wildly over time. Your signal to maybe sell your gold and buy stocks is when that ratio is super low, when 1 ounce of gold can buy a huge chunk of the stock market. The exact same logic works for housing. It's all about swapping assets, not just cashing out. But here's an even crazier idea. What if the ultimate exit strategy is to never exit at all? I know, it sounds weird, but there are some pretty advanced ways to use the value locked up in your physical metal without ever actually selling it. Now, to get this, you have to really understand the massive difference between paper gold and physical gold. Paper gold, like an ETF, is basically an IOU. It's a promise that lives inside the financial system and depends on a whole chain of other people doing their jobs. Physical gold, coins, bars, the stuff you can actually hold, is totally different. It is a direct asset you own that exists completely outside that system. There's no counterparty risk, and that is everything. Because you own the asset outright with no strings attached, you can put it to work. You could look into special bonds that pay you interest and can mature into even more physical gold. You can take your metal to a lender and use it as pristine collateral to get a low-interest cash loan, which you can then invest or spend, all without selling your core holding. Or you could even act like your own private bank, using your reserves to fund other people's ventures. You stop thinking of it as a shiny rock, and you start treating it like your own personal reserve bank.
And that brings us to the final and most important question, and it's one you have to ask yourself. Are you holding gold to speculate, to chase a rising price hoping to sell for more dollars down the road? Or are you holding it for survival, as a long-term anchor of wealth, completely outside the traditional system, like a form of financial insurance? Your answer to that question changes everything. It determines your strategy, your mindset, and what you do next.